Okay, we're getting news out that the CBK is not really impressed with these 6 commercial banks that have decided to raise base lending rates on the back of recent interest rate hikes. Why is the CBK against this?
Thanks a lot. The CBK is basically against that the recent spate of rate hikes because one, the market has really taken the fact that the CBK has de-operationalized the CBR by hiking the overnight window 175 BPS. I think the banks are taking the signal that the CBK has actually de-operationalized the CBR. So they're saying, hey, if the CBK is lending them at the overnight window at 8%, why don't you pass on the cost? So we are seeing all these spiraling in the market, and I think we might see further rate hikes from other banks going forward.
What is this going to mean for the money markets? We are seeing the shilling a lot stronger, and I think that's been the real priority for the Central Bank of Kenya, is to try to reduce volatility in the Kenyan currency. But obviously, as you're saying, the trickle-down effect starting to be felt.
I think my sense is that the shilling, obviously, on a short-term basis, the central bank's recent rate hike on the overnight window was beneficial in the short-term position. But I think as we go on, and I saw today's the governor's comments, there's a knee-jerk reaction from the recent finance minister's tax exemption of grain, especially maize, to ease the shortage in the country. I think now there's a market perception that there's going to be a rush for the dollar because every other importer is going to rush in to get the dollar to import the maize. So there's that pressure coming in from the grain importers, coming on the back of the finance minister's tax exemption of maize imports. And then added on top of that, we have another pressure from oil importers, you know. So all this barrage of forces coming on the shilling, we might see it touch, actually today it touched a bit of 90. But I think it's short term, and when all these forces demise and freeze off, we might see the shilling back to 88 levels.
I mean, everybody's looking forward to the next MPC and what might happen. And conventional wisdom is continue with monetary tightening. But there are indications that the CBK won't actually do that.
I think to the CBK, it's a classical dichotomy. I think they have to prop up economy at the same time they have to clamp down on inflation. And I think for them, it's a question of, it's a knife-edge scenario for them. And I think I'm looking at a situation whereby they are caught up between maintaining the CBR, which actually, according to the market, is de-operationalized at the moment, and then propping up the economy. And I'm looking at a situation whereby they could do a 50 BPS rise, not really a 50 BPS, but 25 BPS rise on the CBR, just to signal the market that they are going ahead with that monetary tightening stance. So I think going forward, it's a situation, it's a knife-edge scenario going forward, and we have to, the CBK has to support the economy. They have to fight inflation, and at the same time, there's an overnight borrowing that is currently hovering at 8%, and I think all this factored in, there's still going to be monetary stance tightening policies going forward. But I think psychologically, the CBR now is off the table, and we are looking at the overnight window.
Right.
So I'm looking at probably a 25 BPS rise just to signal the market that, hey, we are still tightening the liquidity.
All right, let's move on to what we're seeing on the equities side, and some gains today for ARM, Ati River gaining 5.14%, Kenya Re as well, and Safaricom in today's session did gain modestly 1.2, pushing up the price from the 390 we've seen to 395.
Actually, look at the equities market. From Monday, it's been a preserve of the foreign investors. They've been ruling the market. And they've been limited to only probably a basket of 4 stocks. So looking at Safaricom, Equity Bank, Kenyan Market, and Barclays. These have been booming the stocks since Monday. And there's heightened activity. They've been really overstretching their positions on these and really overstretching their betting length on these 4 stocks. And the rest of the stocks, they'll be left the preserve of the local investors and local investors. And I can tell you that there are 2 new listings coming on board. And there's a lot of, the market's downdraft at the moment is coined around the 2 new listings. There's a lot of preparations by local investors towards the 2 new listings. Right. So we might see a lot of pullbacks. for most of the stocks.
Right.
There's a lot of pullbacks even going forward.
Right.
Just to finance their participation in the upcoming 2 new listings. You know, the market has been looking for buy incentives, especially local investors, for a while. There are no buy incentives. They're still spectating, you know, sitting on the spectator seats for a while. And now there are 2 new listings coming on board. So everyone is gearing for that. And there's a lot of pullbacks from other stocks to finance that. And we might see it until after these 2 exits.
Let's talk about those new listings very briefly. I mean, a lot has been said about the trans-century listing, introductory listing, price of about 50 shillings, what we're seeing on the OTC. What are your expectations for British American Investment Company?
I expect British American Investment Company to excite the market. Although on the trans-century side, there will be a bit of cautious trading because you look at the information memorandum, they are listing at a PE of 38.8. There's a bit of skepticism in the market. That's too high. I mean, I get calls from investors asking me, is that PE too high? So a PE of 38.8, I don't think there's a count at the market right now that's trading at that PE. So I tell them, and I look, my sense is that, one, a PE can be high on 2 reasons. One is it's overvalued, or the market is just generally extra bullish on it. So I think there's going to be some skepticism and cautiousness, especially in trans-century, now that, coupled with the fact that it's an introduction listing. So I see a bit of heightened activity on British American insurance listing, and I see a bit of cautiousness on trans-century going forward.
All right, and let's talk about the losers in today's market finally. It's the services stocks. I know you're saying that investors are holding on to their positions. Some are trying to liquidate their positions so that they can participate in upcoming IPOs. But for the longest time, it's the services stocks that have been the darling of the market outside of those blue chips you referred to earlier on, Equities, Safaricom, KCB. People have loved some of the media stocks. They've loved Kenyan Airways and certainly have been fascinated with the refurbishment plans by TPS.
Yes, I think all the other sectors that are represent the stock market, they're currently undergoing through some correction, even from an industry perspective. But if you look at the media, they're actually beneficiaries of the current. We actually have, there's an extension of what we call a media inflation that we saw start from early 2010, and it's extending into 2011. This has will really prop up the listed media stocks, and I'm looking at Nation Media Group and Scan Group, gonna prop them up. So we might see a lot of bullishness, even the stock price on these 2 counters, even going forward. Now, TPS, of course, obviously all this, there's a bit of a lack of momentum on the stocks on a short-term basis, because I told you a lot of it is coined around preparation for the upcoming 2 new listings. We will see a lot of local pullbacks going forward, and you might see stocks with the downswings of up to 4%, 5% in a day. You know, so I think on a short-term basis, there's still the market is still trading at relatively good valuations. They are low, but I think on a longer-term basis, there's a bit of bullishness that is still there, that people are taking strategic positions on most of those stocks. And I think going forward, I think the strategy for probably the next half month is just hold on to your positions. I think there's still a price discovery process on most of those stocks. So it will be strategic to hold.